Hello everyone, this is June Collier with Make Your Money Work For You. In this video, I'm going to walk you through the Summary tab on Yahoo Finance and explain each term listed. To get to this page, type in finance.yahoo.com. In the search bar, you will type in the stock ticker symbol for the stock you wish to research. If you don't know the stock ticker, simply type in the name of the stock and Yahoo will provide you with the stock's ticker symbol. For this example, let's use Apple. I have taken a screenshot of the Apple stock page on Yahoo Finance. Today is Saturday, August 1st, 2020. The stock market is currently closed, but that does not prevent me from showing you everything you need. This page shows the stock data for Apple Incorporated. The first thing you see is the company's name. Next to that, in brackets, is the company's ticker symbol. The ticker symbol is a unique abbreviated identifier of a public company. In this case, Apple's ticker symbol is AAPL. If you do not know what a company's ticker symbol is, type the company's name in the search window, and if it is a publicly traded company, Yahoo will provide you with the ticker symbol. Below the ticker symbol is the stock exchange this stock is trading on. Apple is trading on the NASDAQ. Most American technology stocks trade on the NASDAQ exchange. Next to the NASDAQ is the currency that this stock is displayed in. In this example, it is US currency. Below this, in big bold numbers, is the current per share price of the stock. Yahoo tells you that the price is real time, but usually it's delayed slightly by a minute or two. Next to the price, you will see how much the price has changed since the market opened. In this case, Apple's stock price is up $40.28 since it opened. Because it is up, this number is colored green. If it were down, this number would be colored red. Next to the number in brackets is the percentage change. In this example, the $40.28 increase is a 10.47% increase. This number is also colored in green because it is up. Below the price is an indicator that tells you the date and time of this data. If we were looking at this in real time, it would list the date and time of this price. The market is now closed. This example shows that this number was as of the close of July 31st at 4 p.m. Below this, we're going to look at the stock summary. There is a blue line under summary letting you know that we are looking at the summary section of this stock. The previous close is the price per share that the stock was trading at the end of the previous market day. In this example, that would have been Thursday, July 30th. The U.S. stock market is open Monday through Friday, except for holidays. The market opens at 9:30 a.m. Eastern Standard Time and closes at 4 p.m. Eastern Standard Time. The next item down is the open. At the opening of the trading day, this is the price per share that the stock opened up. You might be wondering why the price is different than the previous close price. Stocks do not have to open at the same price they closed at the day prior. The reason is there is after-hours trading as well as pre-market trading. Most people don't have access to that, but trading goes on after the market closes and just before the market opens for the current day. Sometimes the price per share can be quite different than what it closed at the previous day. In this example, Apple announced a 4-for-1 stock split after the market closed on Thursday. This created a buying frenzy in after hours and pre-market trading. So at the official opening of the market, Apple gapped up $26.78 from its official close on Thursday. A stock can gap up or down. Large gaps are usually caused by news that come out after the market has officially closed. Good news can make a stock price gap up, while bad news can make a stock price gap down. The next item is the bid. Buyer's bid. So this is the highest price that currently has an order set up to purchase that someone is willing to pay for the stock and the number of stocks they're willing to buy at that price. In this example, we're looking at $427.26 for up to 3,000 shares of Apple stock. The item just below that is the ask, seller's ask. So this is the cheapest that someone is willing to sell the stock for and the number of shares they're willing to sell at that price. In this example, it's $427.48 for up to 3,100 shares of Apple stock. Remember, buyer's bid and seller's ask. The difference between the two prices is called the spread. In this case, the spread is 22 cents. We will cover more on this in another training. Next is the day's range. This is the price per share that the stock has traded at throughout the current trading day. The lowest Apple traded at on this day was $403.36. The highest Apple traded at on this day was $425.66. Below that, we have the 52-week range. This is basically the same as day's range, except it's through the last 52 weeks. In the last year, the lowest Apple stock has traded at was $192.58. In the last year, the highest Apple stock has traded at has been $425.66. This data can be helpful as it shows you where the stock was trading at throughout the year so that you can compare where it is now. Many investors use this information to avoid buying at the top price range of a stock, and they wait for a pullback to enter into the trade. Next, we have volume. This is the number of shares that were either bought or sold on this current trading day. Below that is average volume. This is the average number of shares that are bought or sold on any given regular trading day. Comparing volume with average volume will show if more than the average shares have been traded on that day or less than the average shares have been traded on that day. In this example, Apple normally trades 35.4 million shares on a normal trading day. But on this day, Apple traded 93.5 million shares. This is a 164% increase in volume trading. Volume trading often impacts the price increase or decrease of a stock, as seen in this example. Next is market cap or market capitalization. This number represents how much a company is worth, also referred to as market value. To get this number, you multiply the price per share times the number of shares the company has outstanding. Apple is worth $1.8 trillion, which makes it a mega cap stock. Just below that is beta. This indicator will tell you how volatile the stock is. Volatility represents how large the stock prices swing around the average price. The lower the number, the less volatile the stock. The higher the number, the more volatile the stock. Anything under 1 is considered low volatility. Above 1 is high volatility. Next is price to earnings ratio, or the PE ratio. Next to this indicator in brackets is the abbreviation TTM, which stands for trailing 12 months. This number is calculated using the last 12 months of earnings data. It is calculated by taking the current share price and dividing it by the earnings per share for the last year. PE ratio is often used by investors to determine the value of the stock. A low PE ratio may indicate that the stock is undervalued. A high PE ratio may indicate that the stock is overvalued. Many other factors go into the valuation of a stock, but the PE ratio is an indicator that investors use. At the time of this recording, the S&P's PE ratio is 28, but the current average for the last 5 years is 16. Therefore, anything under 16 would be considered a good value. Apple has a PE ratio of 32.24, which is very high. A higher PE ratio shows that investors are willing to pay a higher share price today because of growth expectations in the future. Next, we have earnings per share, or EPS. Again, in brackets is the abbreviation TTM. This calculation is done by taking the company's earnings over the last year and dividing that by the total number of shares, and that gives you the EPS. Earnings per share is an indication of how healthy a company is. The higher the number, the better, because it represents how profitable a company is. If the number is 0 or negative, the company is losing money. A company with high earnings per share ratio is capable of generating a significant dividend for investors, or it may plow the funds back into its business for more growth. In either case, a high ratio indicates a potentially worthwhile investment, depending on the market price of the stock. EPS is typically considered good when a corporation's profits outperform similar companies in the same sector. A company's historical data is important when assessing how good or bad an EPS is. A consistently rising EPS over the years is a positive sign, and it means the company is making good, consistent growth. Whereas a drop in EPS is a cause for alarm to the investor. Next, we have earnings date. This is the range of dates for roughly when the company will issue its next quarterly earnings report. Every public company is required to release a quarterly earnings report. The earning reports break down all their activities for the prior quarter. They usually have a telephone call or webinar and an earnings letter that they release. You can often listen or watch the live earnings call by visiting their investors relations page, getting the dial-in information, or reading the transcripts that are posted after the call. Most traders don't like trading a stock days leading up to the company's earnings call because the stock price can generally shift quite a bit, either up or down, based on what this report has to say. Many will wait until after the earnings call before deciding whether to trade the stock. Forward dividend and yield is next. This is an estimate of what the company is expected to pay per share as a dividend over the next year. In brackets is the value expressed as percentage of the current stock price compared to the dividend paid. You can use this to get a quick indication of how much money you will make just on dividends. Just below that is the ex-dividend date. This is the date you need to own the stock by in order to get the next payable dividend. Finally, the 1-year target estimate. This is an estimate of what a group of analysts believe the Apple stock will be worth in 1 year. This is an estimated target. You will find that analysts have widely varying opinions. So make sure you do your own research and come to your own conclusions. As we can see, Apple stock has already blown past the analyst's estimated target price. Please do not put much weight on this piece of information. This concludes the breaking down of the Yahoo Finance stock summary page. I hope it has helped you get a better understanding of the terms used on this page and their meanings.